You have probably heard about this mythical thing called stablecoins on the blockchain or cryptocurrency. But is this one of those fads that come and goes like NFTs or meme coins? I don't think so. I think this is something we need to take seriously, and that's partially because big business is taking it seriously. So let me explain why stablecoins are the future of money. And let's start with what a stablecoin is. A stablecoin is simply a dollar, but it's denoted on the blockchain. Most stablecoins are backed by reserves, so an actual dollar. If you have a dollar stablecoin, there is a dollar backing that by a company. Circle is one of the biggest stablecoin operators in the world. They have reserves that actually generate interest. That's how Circle makes money from their stablecoin. Tether is another big stablecoin operator. They're a little bit more opaque, but they say that they have all the reserves to cover all the stablecoins that are outstanding. What makes stablecoins is unique is they live on the blockchain. They're not sitting in your wallet. They're living digitally on the blockchain. That provides a lot of flexibility for how these stablecoins are going to be used in the future. And stablecoins are already a big business. According to data from Visa, there are $230 billion worth of stablecoins today. And the numbers behind these stablecoins are getting enormous. $34.3 trillion worth of transaction volume in the past 12 months, over 6.5 billion transactions, and 201 unique sending addresses. And this is data that's coming from Visa, a company that could be disrupted by stablecoins. The attractiveness of stablecoins is so massive and the money involved is so big that companies that you might not expect are starting to get involved. I mentioned that Visa is tracking exactly what's going on with stablecoins. They're interested in stablecoins not only because it could disrupt their business, but it's a potential opportunity for them. Companies like PayPal have seen the growth of the USDC stablecoin, which is run by Circle, and where some of their revenue goes to Coinbase. That's actually one of Coinbase's biggest profit drivers. And they said, you know what? I want to start my own stablecoin. They have now a PayPal stablecoin. And even JP Morgan is getting into the game. I'll get to that in just a second. But stablecoins started as something that were used primarily on the blockchain for exchanging cryptocurrencies for a commonly used currency. Even traders didn't want to have the volatility of Bitcoin or Solana or Ethereum. They wanted to have a stable currency, hence the growth of stablecoins. And there's often stablecoin pairs. So you could trade Solana for USDC and then turn that USDC into Ethereum. That was really how the industry got started. But the advantage of the blockchain is that it's less expensive to move money from point A to point B. You can move money 24/7, and you can even use smart contracts. So this has opened up a lot of business opportunities, and big business is starting to get involved. One of the companies that has made a lot of inroads into stablecoins, bought a couple of companies, is Stripe. And the big thing that Stripe is doing with stablecoins is they're actually lowering their fees. A 2.9% fee that you would pay to use a credit card on Stripe goes down to 1.5% if you're using stablecoins. That means that merchants get to keep more money of each transaction if buyers are willing to use stablecoins. Shopify saw this as so attractive that they recently opened up stablecoins as well. They're actually giving rebates to merchants for accepting stablecoins, and soon they will be giving rebates to customers. And that brings us to the big news that happened recently. JP Morgan is opening up deposit tokens. This is run on the Base blockchain by Coinbase, but they're going to allow commercial clients to deposit money, and that money is going to go onto the blockchain. That's going to make it easier to move from one country to another or move to another currency without the long delays and high fees that come with wire transfers and foreign currency exchanges. If you're questioning the future of stablecoins and you see that Stripe, Shopify, and JP Morgan are developing their own stablecoin businesses, you should take this a little bit more seriously. So what exactly is the benefit of stablecoins, and why is this a potential high growth business long term? I mentioned that the blockchain is going to be potentially significantly cheaper rails to run on than traditional payment rails. So if you think about payment rails like credit cards, debit card transactions, ACH transfers, and wire transfers, those are all expensive and time-consuming ways to move money from point A to point B. If you take a credit card transaction, you're going to pay about a 3% fee, and the merchant isn't actually going to get that money for a couple of days. But if I pay for a transaction with a stable coin, that merchant could get their money immediately with essentially zero fees. So depending on the stable coin, depending on the blockchain, this can be a much faster, much cheaper way to move money. That's the real threat to traditional payment methods. There's also benefits to owners of stablecoins themselves. Some companies are starting to offer yield for holding stablecoins on their platforms. Coinbase is an example of this. they will share some of the money that they make from the USDC stablecoin if you hold USDC in your Coinbase account or your Coinbase wallet. This is a lot like a savings account, but instead of a bank making money on deposits by loaning that money out to people who are trying to start businesses or buy houses, this is all yield that's generated typically from treasuries. The blockchain is also a lot smarter than traditional money. I mentioned that you can implement smart contracts on the blockchain. So you can pay for something and have a contract behind it. There could be a digital ownership that is denoted when you make that transaction. So let's say you pay for a subscription. That subscription can then sit in your digital wallet. This provides a lot of ways for blockchain companies, for payment companies, and for other technology companies to innovate on top of the blockchain with stablecoins as the medium of exchange. So is this a fad or is this a future? I think the evidence is clear. This is absolutely the future of payments. I think it's also going to be the future of the way that we trade stocks and bonds. I think that our bank relationships are going to change because of stablecoins. There is a lot of innovation that's going to happen on top of stablecoins, and this innovation is just getting started. I mentioned that there's about $230 billion of stablecoins out there today. That number could easily 10x or more over the next decade. That provides a ton of opportunity for investors who are investing in the industry, whether you're looking at Circle, operating the USDC stablecoin, and Coinbase, who generates about $1 billion from their partnership with Circle, or you're looking at it as an opportunity for companies like Shopify or JP Morgan, or even a threat to Visa, MasterCard, American Express, and Discover. Stablecoins are going to impact the markets for years, and I think this is a turning point for the industry. Now, let us know what you think about stablecoins. Is this a fad or is this a future, and how are you investing in it? Leave your comments in the comment section below. And of course, check out fool.com/invest to get our top 10 stocks to buy right now. Thanks for watching, everybody. We'll see you here next time.